With time, investor behavior keeps on changing. With better internet connectivity, ease of trading, and the younger population's affinity for equity investing, capital markets are witnessing an increase in top-line growth with Demat accounts, broking accounts, folio accounts, mutual fund industry AUM, resulting in better margins and profitability. Hi everyone and welcome to Centrishala. My name is Anjali and today we are talking about Tata Nifty Capital Market Index Fund NFO, which is India's first Nifty Capital Market Index Fund. This NFO opened on 7th October 2024 and will remain open till 21st October 2024. Now let's understand why should you invest in the capital market theme. India's mutual fund AUM to GDP ratio is 16%, which is low as compared to global average of 74%, with Australia being at 192%, USA at 145%, Canada and France at 103%, UK at 85%, Brazil at 67%, and China at 19%. This shows that being a developing nation, India has immense growth of opportunities. Secondly, the number of Demat accounts in India has grown 3 times over the past 5 years from 20 million to 163 million. This is a reflection of growing interest in the stock market and financial products, yet it is a small fraction of the population, indicating a large upside potential. However, despite the growing number of Demat accounts, Indian equity market is highly underpenetrated with only 8% of Demat penetration as compared to the USA and China with 32% and 14% respectively. Thirdly, mutual fund assets have moved up to 35% in fiscal 2024 to a new high, leading to mutual fund folios doubling in 5 years at 20 crores in August. Lastly, India's SIP ecosystem remains robust. Investors' SIP adoption continues to rise with approximately 2 lakh crores in fiscal 2024, with number of SIP accounts nearly reaching at 8.4 crores. Now let's talk about Nifty Capital Index. Nifty Capital Index captures the full ecosystem required for investing and trading. It covers exchanges and data platforms at 32%, asset management companies at 26%, depositories and RTAs at 22%, stockbroking entities at 17%, and wealth management firms at 3%. In the last 3 years, top-line growth has been at 20 to 25%, which is weighted average for the index, leading to a 30 to 40% PAT growth. As these segments are asset-light with near to zero debt on their balance sheets, running a good operating leverage as top-line rises and the cost rising much lesser. Thus, these businesses have seen better margins and profitability. In the financial year 25 and 26, the earning growth is expected to be healthy, approximately around 20 to 25% at portfolio level. Now let's understand about their index constituents. The universe they have is Nifty 500. Talking about this stock selection criteria, so they select 20 eligible stocks based on 6 month average free float market capitalization. And the stock capping is up to 20%. Now let's understand about their scheme details. So it is an open-ended scheme replicating or tracking Nifty Capital Markets Index. The exit load is 0.25% of the applicable NAV if redeemed on or before 15 days from the date of allotment. Their minimum subscription amount is Rs 5,000 and the fund manager is Kapil Menon. So this was all about the Tata Nifty Capital Market Index Fund NFO. Well, thank you so much for watching this video. Stay tuned.